This video is based on the technical analysis of Nasdaq 100, and at this point we are on the daily chart, as you guys can see. And in regards to this particular chart, we can see that the market is in an upward trend, and to add to that, we had an overextended W structure over here. And as I usually say, it's an overextended W structure because that first leg is much higher than that second leg, and it has a neckline at that level more or less. And what we would love to see at this point in time is for price to actually head back to the neckline to give it a test. And where we have that neckline is where we will most likely look for those potential buying opportunities, especially if that neckline aligns with any key numbers that we have on the Fibonacci Retracement tool, right? So let's just have a look in terms of whether we have any key numbers that align with that neckline. And there we go. We can see, guys, that the neckline, which is more or less at that level of this overextended W structure, aligns, we could say, with both the 50% as well as the 61.8% Fibonacci retracement levels. So let me just actually delete this Fib tool. So should price from where it is actually move down to around this level, at this level where we have that neckline is where I believe we should be looking for those potential buying opportunities. And that is because, as I said, guys, number one, we are in an upward trending market. Number two, we actually have a W structure over here. Number three, we have price breaking to the upside of that W structure. Number four, if it does happen, we would have price come back to the neckline to give it a test. And number five, we have the neckline actually aligning with both the 50% as well as the 61.8% Fibonacci retracement levels. So this would be a good area to be looking for those potential buying opportunities, right? Let's zoom in and see what else we have on this chart that we should be paying attention to. Another thing that I see is that we had this candlestick over here, and what it is a bullish candlestick which has a small body and quite a long upper wick. And you guys know that where that wick ends at the top, there was a lot of liquidity there, and that is why we actually saw these two candlesticks going up to that level to grab that liquidity, as liquidity is actually money that needs to be triggered by the market at one point or another. Anyway, from here, let's head down to the H4 chart and see what's happening down there. Let's have a look. Just to recap, remember on the daily chart we spoke about how we have this W structure which has a neckline at that point, and I said to you guys that ideally we want to see the market come back to the neckline to give it a test, and at this point is where we would look for those potential buying opportunities. Now that we're on the H4 chart, what do we see? Let's have a look. On the H4 chart, I'm just going to start off by actually adding my H4 channel as well, so just bear with me while I do so. And I would add it more or less in this manner. Let's have a look. And just remember that whatever drawings that we add to our charts need to be as accurate as possible, just to ensure that ultimately when we do execute, our execution is also very much in line, right, and perfect. And there we go, more or less we could say that that's our H4 channel. And we can also see that in regards to the H4 chart, we are indeed in an upward trending market or an upward trajectory. But what else do we see on this chart that we should be looking at? We can see, guys, that price at this point in time is actually at a very strong level of resistance, and actually we could say that we have what seems to be a potential M structure or double top forming. However, in order for this to be valid, we need at least one candlestick at this point to close as a bearish candlestick, and once that happens, we may potentially see the market actually move further down. And as I said, guys, we may see the market actually move further down to around this level, which is in line with the neckline of this W structure. And as I said, guys, at this point we may look for those potential buying opportunities. We're not just gonna buy, we're gonna look for potential buying opportunities at the level, right? Anyway, let's zoom in and see what else is happening. So guys, as much as I said all that, right, remember, right, this is a very strong level of resistance, as we've had two touches or two rejections so far. And as I said, we may see price move all the way down to those levels that I spoke about. However, just bear in mind that we had also had this triple bottom over here, right, which also has a neckline at that level. And as much as I said to you guys that chances are that price may move all the way down to those levels that I spoke about, we may also potentially see the market come back to this level, which is the neckline of this triple bottom, only for price at this point to move further up again. So we just need to be careful. Another thing that I also want to point out is that as much as we have this potential M structure, Just note that whenever it comes to M structures, what normally happens is that a lot of traders and investors usually sell the second leg of that M structure or double top, and they place their stop losses just above, right? So it is quite possible that the market may give us a trap at this point, where we see price only moves further down to around this level, giving a lot of traders and investors lots of opportunity to sell and place their stop losses just above, only for the market to in the future go all the way up to trigger all of those stop losses that I just spoke about. So we just need to be careful and make sure that we exercise good money management, especially because we have NFP, which is non-farm payroll, coming up in the next hour or so. But